The U.S. labor market is showing signs of deepening strain, with unemployment numbers hitting a post-pandemic high that's sending shockwaves through industries and households alike. But here's where it gets controversial. The surge in long-term unemployment isn't just about layoffs. It's about a slowdown in hiring that's leaving millions stranded in a limbo of joblessness. Let's break it down. According to recent data from the U.S. Department of Labor, the number of Americans collecting unemployment benefits for at least a week, known as continued claims, soared to 1.97 million in late July, a staggering jump from 1.85 million in early January. This marks the highest level since November 2021, signaling cracks in the labor market's resilience. Meanwhile, new weekly unemployment filings rose slightly by 7,000. But the real story lies in the prolonged struggles of those already out of work. The numbers paint a grim picture. Even without a surge in layoffs, many Americans are finding it harder to re-enter the workforce. A separate jobs report revealed hiring is now occurring at one of the slowest paces in over a decade, excluding pandemic-era disruptions. Daniel Zhao, chief economist at Glassdoor, highlights the double-edged sword of this slowdown. Slower hiring doesn't just hurt the unemployed, it traps current workers in stagnant careers. Imagine being stuck in a dead-end job because there's no upward mobility. And this is the part most people miss. The root causes of this labor market softening go beyond typical economic cycles. Experts point to a cocktail of policies from the Trump administration, including aggressive tariffs on imports from dozens of countries, federal spending cuts, and restrictive immigration rules. These measures, they argue, have created a climate of uncertainty. For instance, tariffs implemented earlier this week are expected to raise costs for businesses and consumers, potentially stifling hiring further. Businesses can't plan for the future when the rules keep changing, Zhao explains. The ripple effects are already visible. Federal layoffs are accelerating, with a recent Supreme Court ruling greenlighting Trump's plan to cut thousands of government jobs. This could trigger a domino effect in sectors reliant on federal contracts. A recent jobs report also revealed a staggering revision. Job gains for May and June were 258,000 lower than initially reported, and the unemployment rate edged up to 4.2% in July. While still historically low, this uptick has raised alarms. But here's the twist. President Trump responded to the data with an unprecedented move, firing Erica McIntyre, the head of the Bureau of Labor Statistics, hours after the report's release. Trump claimed without evidence that the data had been manipulated for political gain. This sparked immediate backlash, with critics calling it an attack on data integrity. Meanwhile, industries like retail, construction, and manufacturing are on hold. Employers in these sectors are delaying hiring and expansion plans, bracing for higher import costs from the new tariffs. Office-based white-collar jobs, meanwhile, have seen stagnant hiring for months. Economists warn that the current situation is a fragile balancing act. Employers are holding on to workers due to post-pandemic labor shortages. But if economic conditions worsen, mass layoffs could follow. We're in a holding pattern, Zhao says. But how long can businesses wait before they start cutting? So, what's your take? Are these policies justified as long-term fixes, or are they creating more harm than good? Share your thoughts in the comments, because the debate over the future of work has just begun.